Well, coming up on this episode of the Smart Mortgage Show, we are looking at September, a market update for you. We'll talk about rates, refinancing up, what is Bill watching for, all that coming up. Well, hello, welcome into the Smart Mortgage Show. I'm Ben George with Bill Litton at Cross Country Mortgage, and we got a good show for you as we're moving into September, Bill, and of course, all eyes still on mortgage rates and the upcoming Fed meeting, right? That's the big thing on the calendar this month.
Yeah, so we are watching closely. We're watching all of the data. We're watching the economic indicators to see what's going to happen at the September Fed meeting. We feel like, based on the direction of all the economic indicators, and you hear Chairman Powell say a lot that, it's data dependent, which is a very smart thing to say. But it seems that things are lining up in a way that we'll probably get a 25 basis point decrease in the federal funds rate at the September meeting. So the market probably has already built that in because of the degree of certainty of that decrease in the federal funds rate. So the rates that we're seeing right now probably already are have anticipated that. The smart money is already there. But we could see additional decreases if the Fed moves the rate lower by 50 basis points in that meeting, or if the minutes, and probably even more important than the minutes, when we watch the release of the minutes and the market digest it, you could see a little bit, because we're getting, bond quotes that are pretty instantaneous on our end. What we see a lot of times is when Chairman Powell speaks afterwards at the press conference, he dives a little deeper, he gives a little bit more information, gets a little more detailed. That is actually a bigger market mover a lot of times than the Fed minutes. So if he has a real bullish tone about, well, we feel like that the economy is slowing at a faster pace than we thought, he'll give an indication of future decreases in the federal funds rate. If it seems like it's a certainty of more future decreases, then at that moment, the market will start to build those in. So a lot of stuff we're watching. We feel like the other big piece of this, Ben, is that, and this is really important, with COVID, the rates came down to the 3% range, okay? And then rates went up, and then we saw a couple decreases to the lower sixes in January of 2013, 2023,
Yeah.
and then also in December of 2023, we saw the rates come down closer to 6%, and then they went back up. What's different about this time is all of the economic indicators are behind this move lower. So we feel like the rates being where they are today, which is, roughly 6.375%, we're in a channel now where we believe rates are going to stay here or lower.
That's interesting. So with the Fed meeting, you're not necessarily looking for a response by what is said or what the decision on rates is at that moment. It's more what comes after that and some of the indicators for future movement potentially. That's where we could potentially see a move off of that. Everything else is kind of baked in at this point.
Yeah, it's kind of like if you invest in Apple today, the Apple stock price reflects where the market thinks it's going to be over the next 5 years based on the product line they have in the pipeline. Well, the bond market's the same. So if in the bond market, if they feel like it's 100% guarantee, which they do believe that we're going to get a decrease in September's Fed meeting, that's already baked in. Now we need to kind of project, well, where do we think it's headed, and get out ahead of that based on the findings from that meeting and the press conference afterwards.
Okay. So you talk about this time maybe a little bit different just in terms of some of the indicators, and the data suggests that, okay, this rate decrease seems to have some staying power. Do you think, I want to kind of make sure I understand what your perspective is on it. Just, you think that's something that, okay, for the next year or so, don't expect rates to go back up again? I know you can't predict the future, but is it something that you think's here to stay for more than a quarter, 2 quarters or so?
So I think that's a great question because I think this helps people to understand their time horizons and, their buying potential. So, and you said something key, right? We can't predict the future. So let's just say there's some crazy global event that affects mortgage rates. That's a different variable we're not planned for. So barring anything like that, then we believe because of the way the economic indicators are lining up. So inflation continues to cool at a slightly faster pace than the forecast expected on the PCE number last week. So inflation cooling more quickly, the job market cooling as well. So job openings are down at their lowest level in like 3 years. Because of those things, we believe the slowing is going to keep rates either where they are or maybe even a little bit lower over the next 12 months.
Okay. Again, if you want to follow up, maybe sit down and look at your mortgage options, kind of get an idea of where rates are, what rates you could secure for the next home you want to buy. Again, go to smartmortgageshow.com. You can always call Bill directly at Cross Country Mortgage. That number, 484-352-4151. Again, all the contact information will be in the show description as well. So make it easy for you to get in touch with Bill. The other headline I saw this month, Bill, just I guess was maybe today I saw it come across, but refinance demand up nearly 100% from a year ago. So I know we've talked about this a little bit throughout the year in terms of you expect that to maybe reverse because a year ago is pretty low. Are you seeing the same thing? More and more people asking about refinancing?
Yeah, so 100% increase from nothing, right? Because it's about where it was. But your point is good because it is up 100%, and we do feel like that's going to continue to climb. So when we look through our database of the customers and clients that we've helped over the past few years where rates are higher, we're seeing lots of opportunities, and there are some individuals where it makes sense to refinance right now because the disparity between today's rate and where they locked in when they closed, the current rate that they have, the disparity is large enough that saving $200, $300, $400 a month, it's a bird in hand. Start saving right away. Every month that you wait, if the rates don't decrease enough, now there's an opportunity cost. And also there's people where we're just not quite there yet. The savings doesn't equate to enough savings to outweigh the cost at this moment. So those folks, we're preparing them, and we've got a trigger point where when rates get to this number, whatever that might be for their specific scenario, we're ready to lock them in and move forward.
All right. So again, I know if you have any questions about the refinance, the best place to start is that free 15-minute mortgage and loan consultation. But with that, Bill, is that a good opportunity in that meeting, that initial meeting, to sit down and kind of look at some of the numbers? If you're thinking about a refinance, wondering, does it actually make sense on paper? Does the math actually work out to make sense? Is that a meeting where that kind of discussion can be had?
Yeah, so absolutely. And with all of our clients, we do a full review and an analysis of, does it make sense to do this or not? And right now, so during COVID, when the rates were 2.5% to 3%, almost every one of those meetings resulted in a green light. It makes sense to do it because rates were so low. When rates were 7.5%, almost all of them were, there's nothing to do unless you were paying off a lot of debt. And that could make sense. Right now, it's about 50-50, where we look at the analysis and we say there's enough savings to move forward. It's a bird in hand. Let's do that. Or let's wait a little bit. But that first meeting, we're going to dig deep. We're going to learn a lot. And then we're going to do a full analysis to see, does it make sense to do this?
All right. Again, you can start by going to smartmortgageshow.com or by calling 484-352-4151 for Cross Country Mortgage. Again, we'll continue to kind of keep an eye on where the markets are. And then obviously we'll have a follow-up next month with rates and the Fed meeting to kind of see where maybe we are and kind of where we might be going the rest of the year and into 2025 as well. Bill, as always, thanks for updating us on where things are and what you're watching.
Thanks so much, Ben.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.